India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Thursday morning, and we're coming to you as always from the CNBC TV 18 Motilal Oswal studios. On balance, I mean, things are looking a little better this morning. We'll tell you why as we go along. I'm Prashant, with me my colleague Sonia and Nigel. Guys, good morning.
Hi, good morning Prashant. Good morning Nigel. I don't know where to start, right? It's whether to talk about that big positive, which is the RBI approving the highest ever dividend payout to the government, or talking about those fabulous numbers from NVIDIA. We have a lot of positives to deal with this morning.
Well, that's right. And yesterday we had a fairly volatile session as well because of the Nifty Bank weekly expiry. Today we have the Nifty expiry, so plenty to look forward to.
And in a positive way, I reckon. But, let's see, because there's this election thing, which, of course, is hanging, and it's keeping kind of everyone a little more cautious. But let's begin by telling you what you need to know. Yesterday, around market closing, actually, it was post-market hours, 3:35, 3:40 or so in the afternoon, you had that announcement from the Reserve Bank of India about the dividend which it's going to pay to the government of India for FY24. And that number is the highest ever in its history. I mean, the transfer is going to be worth 2.1 lakh crore for FY24. And this is, almost double of what many were anticipating the number would be like. What this means and why this is kind of important, the size of it, it's so outsized, and that's the reason why you need to take note of it. So essentially, this mega RBI dividend means that government has about nearly 0.3% of GDP, as a percentage of GDP, 0.3% extra fiscal space, which the government can decide, the new government, which will come in and then, of course, present the budget perhaps in July. It will have this extra money in its kitty, and it can decide how to allocate it. It could decide to curb expenditure. This could go towards meeting fiscal deficit targets, or it could actually be used to spend, right, expenditure on various schemes, infrastructure, etc., etc., etc. So that is essentially the big news which came right after the stock markets closed. Bond markets, by the way, were still trading. And, the 10-year here fell sharply, about 6-7 basis points is the kind of slide that we saw. I do suspect that maybe the sharp rally that we saw, there was the expiry effect, etc. as well. But I think the Bank Nifty at one point was down 1% at 3 o'clock. By 3:30, it was down about just 1/3%. The Nifty also saw a sharp recovery from the day's low. Maybe the market was getting a sense of something like this coming. But we'll see. Today, of course, the rupee and bond markets are closed. So you will not see a direct kind of indication of how much the bond market likes it. The bond market likes it. As I told you, prices went up, yields fell very sharply. The other talking point, of course, is the NVIDIA numbers which came through after market hours. I'm talking about after US market hours. And, second quarter projections beat estimates. The numbers for the first quarter also beat expectations. The reported numbers for the quarter ended April, and that's Q1 for them. So Q2 also was much better. Stock in after hours up 6%. The reason NVIDIA, of course, is important is because it's like the Pied Piper for everything tech and AI. Everything tech and AI. And I think you'll be seeing some of that action across these names in Asian markets, etc. as well. Generally, this is good news for technology. Nasdaq futures, by the way, the last time I checked, were up in the green. Overnight, without NVIDIA, because NVIDIA came, as I said, after market hours, so the changes are on your screen, not very much. Nasdaq was down mildly. The 10-year was up 1 basis point, and you had the dollar index, which hit 105 or so, and then closed slightly under it. You also had the FOMC minutes, which came for the last meeting, and they're, to be sure, stale. They're backward-looking. They're not forward-looking, but they had some hawkish comments, and that at the margin, basically noted that many FOMC members are talking about keeping rates higher to get surety that inflation is coming down to their target 2% number. Oil prices are down again 1.5%. This is good news. We are now under 82, 81.74 or so is where we left off. And I think this morning the prices on your screen, it's even lower. So where does all of this leave us? I think in a decent kind of a setup. We ended yesterday around the short-term resistance. And that number is 22,586. That's a 78.6% retracement of the full fall. and we, of course, hit a high of 22,625 or so. And then, of course, that was the adjusted close, which is on your screen. The all-time highs, which is just about 200 points away, still very much in sight. The line of sight is there. It's just, I think, a matter of when. Supports for the Nifty come in at the 20 and the 40-day exponential. I mean, the numbers change, but the levels in terms of the moving averages don't. So that, I think, is something to watch out for. And banks, which have been lagging for some time now, can they come back into some amount of action? The reason I'm specifically mentioning banks today is because yields have fallen. For a lot of public sector banks, even private sector banks, that is a very positive environment that banks with a lot of bond portfolio, especially a lot of bond portfolio, would like to see. And, we'll see where this one goes. But resistance for the Nifty Bank is 48,479, which is the 50% retracement. And then the 61.8% retracement is 48,832. These are near-term levels. I mean, you just need a day or two good days on the Nifty Bank, and you'll be there. Bank Nifty on the lower side should not break for 47,340, which was the recent low that we saw. The GIFT Nifty is going to come up on your screen, and I think that's indicating a flattish kind of start, 8 odd points higher. But, I think the big sort of date is, of course, with the election verdicts on the verdict on the 4th of June. And I think that is kind of curbing and keeping back risk, sort of positive risk sentiment. It's been doing that for the last couple of days, even as we're building in some of these sort of positive cues, so as to speak. Sonia.
Oh, absolutely. And I think, the big positive for the market today is, of course, this dividend, right, that the RBI has announced to the government at 2.11 lakh crores. Now, a lot of brokerages, I went through a couple of reports, so just trying to put out a couple of views. The common view is that this will help the government trim its FY25 fiscal deficit. Morgan Stanley, in fact, put out a note where they said that it could reduce the overall government borrowing as well if other revenue collection is in line with estimates. So this is a big positive for the government. And the higher dividend represents an additional fiscal revenue of around 0.4% of GDP. So this is a big positive coming through. And of course, the market will react to it quite well. The other big positive is NVIDIA numbers. Now, NVIDIA has zoomed past that $1,000 per mark for the first time ever. Revenues beat expectations, went up almost 270%. But the important point is, and something that we had highlighted post last quarter's numbers as well, is that a lot of Indian mutual funds, both active and passive, have exposure to NVIDIA. So, if you want to get exposure there, then many mutual funds have it. We have that list as well, on our website. But just a couple of cases in point: the Motilal Oswal Nasdaq ETF, the Kotak Nasdaq 100 FOF, the Mirae Asset NYSE FANG ETF, the DSP Innovation Fund are just a couple of names that have exposure to NVIDIA. And perhaps, that's the way you can sort of climb onto this rally. So that is another space to look at. In terms of stocks in the news this morning, I'm looking at Nykaa because the numbers were good. Of course, the company had come out with their quarterly highlights a couple of weeks ago, so we had a fair indication of which way things are headed. But very good numbers. Profits have gone up. Revenues have gone up about 28%. And if you look at the market, right, I mean, the Nifty has already put on quite a bit of weight in the last couple of days and weeks. So from the 9th May lows of 21,950, the Nifty is already up about 600 odd points. So that just goes to show, in fact, 650 points to be precise. So given that we have this positive news flow this morning, the market will definitely choose to build on to their gains. But let's see how far we can go. Around this 22,600 mark has proven to be a bit of a resistance for a while. Well,
that's right. Sona, just to sum up what you said, the RBI's dividend, well, that'll support the domestic-facing themes. And NVIDIA's numbers, it's a $2.5 trillion market capitalization, bigger than the German stock market as well. So that could keep tech stocks excited as well. But in yesterday's trade, we did see a good recovery from the low point. And part of that was, because there was a bit of a short covering bounce that did play out. So on the Nifty Bank itself, you did see the open risk came down by close to around 6%, or telling you there was an F&O factor that played out in trade yesterday. And if you pull up the chart, even yesterday we made this point, the 50 DMA is very, very important. Intraday it did breach that level, but it ended bang in line at around that 50 DMA. And today, in fact, it will be important to see whether or not we want to go and test yesterday's low, or we can hold around these levels. That's going to be crucial. The FIs, what did they do in yesterday's trading session? They unwound 6,000 long contracts, added close to around 2,000 contracts odd on the long side. So the swing factor out there is close to around 7,000 contracts. And that's where the net short positioning now moves to around 2.2 lakh contracts as it comes up for you on the screen, going up by around 9 to around 10,000 contracts. The options data. Now, these strikes expire today. So that's why it's important. 22,650 call, 22,600 put. Both of them fairly active in trade yesterday. And just plugging the numbers with their premiums, For the day, the range will be this 200-point range, 22,500, 22,700. Going by the options data that we're looking at. If the lower levels break 20 and 50 DMA, they're going to be important on the downside. The Nifty Bank as well, that was a swing factor yesterday, and we pointed that out as well. It went to a lower of around 47,400. So that becomes important to defend. If that breaches, then you're looking at the 100 DMA. For the time being, we're hovering around this 50 DMA. So you'll want it to consolidate a little bit and try to move back up to around the 20 DMA. In terms of stocks that I'm looking at, Ramco Cements, those numbers were quite disappointing on the margin front. But the absolute number was okay on the EBITDA front because they sold a higher amount of volumes. So they've reduced debt, they've cut back their capex guidance. So because of both those two factors, I think that stock will be in focus. Rank underperformer, not moved anywhere in the last 1 year or so. In fact, it's corrected from the top. So I'll keep an eye out on this one for today's session.
Okay, thanks a lot for that, Nigel. Well, let's kickstart the show on that note. On the equities front, we have Vikas Jain of CLSA, who says that the FII sold $1.1 billion worth of Indian equities in April. Most of the key emerging markets saw outflows except South Korea and Thailand. All categories of FII funds sold Indian equities except for India-dedicated passive funds. So far, May has already seen selling of $3.6 billion by FIIs, turning them into net sellers of $3.3 billion this year so far. FIIs actively bought industrials, IT and communication while they reduced their relative weight from financials, metals and staples. Inflows into domestic mutual funds moderated on a month-on-month basis to $3.4 billion from $5 billion, but was handy enough to counterbalance the selling of FIIs. Okay, well, the money markets are closed today on account of Buddha Purnima. So happy Buddha Purnima to everyone who is celebrating. But plenty of stocks to look at today.
Well, that's right. Let's run you through the list that we're going to be tracking in our special top 10 segment. The list comes up in the screen. Jubilant Foodworks, Nykaa, Metro Brands, Ramco Cements, Garden Reach Shipbuilders. All of them will be reacting to positive news flow. While on the flip side, we have 5 apiece today. You have Power Grid, Sun Pharma, Torrent Power, Petronet LNG and Gland Pharma will be reacting to negative news flow.